Good morning, everyone. I'm Jason Kitigbak. I will be your instructor for Finance 301. Now we're going to be using Canvas as a platform for posting some of the discussions. And then also I will be doing a posting of a video lecture every Friday to make sure that you can take a look at it. But at the same time, please do read through the textbook itself. So I'm going to go through the course itself with some examples. I'm going to show you how to solve those problems, and then at the same time, every week, there will be a quiz for our topic, right? The quiz will start on week number two, because the first one, the one we're going to be discussing this week, is actually a review of accounting. So what is to expect on finance? Finance actually two things. Um, Finance is actually looking at things in the future. So when I say in the future, I know you've completed accounting, right? So accounting, when you think about it, is a review or analysis of information that has transpired. So we always say December 31, 2023, last year, December 31, 2022, or right now in 2024, I would say the trial balance or the financial statement as of, say, July 2024, because right now it's actually in August 2024. So right now, August 2024, it's the 18th of August. It's actually happening, but you have not done the financial statements yet, right? So accounting is accounting for economic transactions that you journalize on a set of books. Finance is using the information from the financial statements and looking forward in order for the CFO, the Chief Financial Officer of a company, to provide data-driven analysis with regard to the business. So what do we mean by that? So finance is actually a tool, right, in order for the CFO or the management of the company to say, how do we grow a business? So it goes back to the basic question. What is the goal of a business? The goal of the business is to grow, to make profit, and then any profit, you return it back to the investors or to the stakeholders. Because we have some companies that are not for profit also. There are some that are for profit. So any excess capital, any excess income are either reinvested back to the company in the form of capital expenditures, meaning that if I make money right now, and then at the end of the year, I would actually use that money in order for me to build more assets. Say I'm a factory, I'll build more assets. I'm a distribution company, I will build more trucks. I'm a distribution company, let me buy another warehouse so I can store goods and then I can invest it on distribution channels or maybe open up a new store. So basically, those are capital expenditures. Now, the question is that how do we ensure that there will be income and then that excess cash through that income will be used profitably or will be used efficiently by the company through capital expenditures, which are revenue generating assets, and then through other means, right, of maybe think about it this way. If you pay your debt right now, say student loan, then you would not have an exposure on interest expense. So that's the same for the company, right? Hey, I have excess money. Maybe what I can do is that I need to pay the one that carries a lot of interest, debt, right? Debt with the bank or with somebody else or investors. Maybe your investors loaned you money. But of course, the question is that, hey, I do not want to use profit only to pay for debtor. Hopefully there will be excess cash, right? And then that excess cash, I need to make sure I invest it on revenue generating assets that would strengthen the business. The business as it is right now, you either are defending your revenue or you are trying to optimize the revenue by going to new markets. So either you're on an offense, especially if it's a new company, you always try to do an offense, right? Let me go to a new market, let me introduce new business so I know I will generate revenue and I have a footprint on the country, on your current geographical location or whatnot. But at the same time, some companies would like to defend their market because maybe you have a limited number of customers within your geographical location, and then you could not expand. So you're trying to defend the market. And as you grow through revenue generating assets, and then you get more money in and save it, then you actually try to think about how do I go to the future by strategically placing or creating new businesses or buying new companies. So I know it's a lot of talk of strategy, and then later on in life, each one of you might either be an entrepreneur, a CEO, a chief operating officer, executive officer, a COO, chief operating officer, or maybe some of you will be CFO, chief finance officer of a company. And then that's what we wanted to make sure that you have taken from this course, right? At the end of this course, I think we have 16 weeks. We will try to go in and understand um, the finance techniques, tools and techniques in order for you to understand numbers. How does it make sense? And how do you use it to grow the business? So basically, that's what we're trying to understand within Finance 301. And then, of course, we'll be using information from the from accountants, basically financial statements that were generated. Uh, Financial information from the financial statements using finance techniques, and then that's basically Finance 301. So should be fun, and then I'll make it as lively as possible. But bear with me. But do please ask questions. If you have a question, post it on Canvas. Send me an email. WhatsApp me. I posted my number, so just in case, just feel free to reach out. Thank you, everyone.